Hey, good afternoon, good evening. Welcome to another episode of the Moving Markets Podcast. This is Jeffrey Dunyan, the owner and founder of Safe Option Strategies. Today is the 6th of February. We've had a long, long day. I'm off to a rough start in this podcast. Number one, I'm getting this done really, really late. It's already 9:30 my time, and I'm in Mountain Time zone for those of you on the East Coast, it's well past bedtime. Getting started pretty late today. Had a kind of a strange day. I won't bore you with the details, but you'll probably be listening to this tomorrow morning, sometime before the market opens. For those of our loyal listeners. I'm going to talk a little bit about the earnings from Ford. We'll, of course, recap what the market did today. I'm a big shareholder of Ford. I have a lot of shares of Ford. I've held Ford for a long time in my portfolio. I'm excited about some of the announcements they made today and some of the news they gave us, and love the way the stock is performing after the market closes. There's a lot more than that going on, but for me, Ford is a big deal. So I'm going to talk about that a little bit. I'm going to talk a little bit about what the markets are doing and kind of what the issue and the trouble is with some of the Magnificent Seven, some of the tech stocks. They were all under a little bit of pressure today, and I'm going to give you my 2 cents on why I think that's the case. So, glad to have you here. Enjoy the presentation. Let's jump right in and talk about what happened today. I've got pre-market up here right now. Let me switch it to what happened in the market. The Dow Jones Industrial Average ended up finishing up 141 points, the S&P 11 points, and the NASDAQ 11 points. Now, even though that NASDAQ is a relatively weak number, 7/100ths of 1%, the NASDAQ, if you look here at the 1-day chart, it spent a good portion of the day in negative territory. It started out in the plus column, and then it dipped pretty dramatically and was quite negative for a good portion of the day, specifically because a number of the Magnificent Seven stocks, the companies that everybody is paying attention to now, Amazon, Nvidia, Meta, Microsoft, um, several of these companies were under pressure today. They were really feeling a pinch. And there wasn't a lot going on in the way of news today. There wasn't a lot of things that were specifically driving the markets. Some earnings reports that came out, but I think the thing that had the Nasdaq under pressure for most of the day, and the reason why some of these companies in the Magnificent Seven were getting some pressure, is because more and more people are accepting the reality of higher interest rates staying around for a longer period of time, and maybe even accepting the possibility that inflation could heat back up. We've had some amazing job numbers recently. We've had numbers way better than expected the last 2 quarters on the GDP. Not only are we probably looking at a softer landing than what was expected, but you've also got to start realizing that that makes it less likely to see interest rate cuts anytime real soon. There's a major worry that if Jerome Powell doesn't start cutting rates, he's pretty much taken March off the table. He doesn't start cutting rates in May, then he's going to be accused in a heavy way, whether this is true or not. He's going to be accused of making rate cuts a political thing if he does them too close to the elections in November. Let's say hypothetically he doesn't cut rates until, I believe there is not an August and there is a September meeting for the Fed. If he for some reason decided to not cut rates in March, that's kind of a given. Let's say he chooses, the Fed. Yeah, when I say he, it's the Fed. They choose not to rates in May, or maybe they cut rates in May and then they don't do anything in June and July and cut again in September. It's going to reek of politics. It's going to have a really strong feeling of being done, and he'll certainly be accused, especially by Donald Trump and his surrogates, of playing politics and trying to um, time those rate cuts to make the current administration look as good as possible. I would like to believe that Jerome Powell is not political like that, but I don't know. Uh, I, I don't know that anybody nowadays is not political, and I don't know that anybody is not political enough to let it leak over into their job, even when their job is supposed to be very non political. So it's hard to say what Jerome Powell will do. But it's this notion and this maybe this gradual acceptance that interest rates are probably going to stick around where they're at for a while longer and that they might even go up again if inflation started to rear its head again. That's the other worry right now is the economy it's a little bit stronger and you could see a slight increase again in inflation. And then you've got all this stuff going on in the Middle East and you got to ask yourself how long can the United States stay out of a direct conflict with Iran? Um, I'm going to get a little political here right now. So if you don't like my politics, I hope it doesn't cause you to turn us off and never come back. I'm not going to apologize for it, but I'm going to get a little political here right now. The current administration is weak and feckless in the eyes of the world, and that's I know that's my opinion, but there is so much ample evidence of that that it's you almost have to intentionally bury your head in the sand and pretend what's happening is not happening to believe otherwise. There is no political will on the part of the current administration to send a clear and decisive and forceful message to Iran. I get the narrative about you don't want to start a bigger conflict or escalate. You don't want to go to war with Iran, but pull your head out of your butt. Iran is at war with us, whether we want to be at war with Iran or not. And the longer we go pretending that that's not the case, the longer this whole situation drags out. Um, so far, what we've done in retaliation, and I'll tell you how this ties into the market. I know I'm getting political, but this ties directly into what's going on in the market and some of what happened today. The longer you go without making it clear to Iran that we are not afraid of them and we are not afraid of hitting them directly and severely, the more you're going to have these Iran proxies, Hamas, Hezbollah, the Houthis in Yemen. You're going to have these Iran-backed organizations continue to throw missiles at ships in the Mideast. You're going to have them continue to attack U.S. bases with drones. You're going to have additional U.S. deaths. We put so much focus this last week and a half on these 3 U.S. Soldiers that were killed, and my heart breaks for them and for their families. And I'm telling you, in my opinion, their blood is on the hands of the current administration, just squarely on the hands of the current administration, because they have done nothing to protect them and to send a message to Iran to knock it off. And it's going to keep going on. It's going to keep happening. But with all this focus on these 3 soldiers that died, there's been so little focus and so little attention by the mainstream media on the hundreds of injuries and more than just a few of them that have been life-lasting traumatic brain injuries. That soldiers' lives have been altered permanently for the rest of their life because of these attacks that are going mostly unchecked and mostly unretaliated against. And it's just sickening to me. It's just absolutely sickening. You won't find a bigger group of elitist cowards anywhere in the world than in the current White House administration. It's Joe Biden, it's Jake Sullivan, it's Mayorkas, who's a complete laughingstock, joke, pathological liar, treasonous son of a bee. Um, you've got Anthony Blinken. I mean, oh my gosh, I wouldn't let these people run a lawn mowing company for my house. They're so incompetent and they're such cowards and they're in this such appeasement type of attitude. And I'll step off the soapbox for a minute on the political side of things, but how long can this go on the way it's going on without having a direct impact on the stock market? You've got this situation where um, this Middle East conflict is sort of dragging along at kind of this slow pace, but at some point in time, it's going to escalate whether we want it to or not. And if it's escalating outside of our control, then we lose not only the narrative, but we lose the advantage and we lose the ability to control things on the ground. And that's going to roll over into oil prices, and oil prices are going to spike, and they are going to directly impact every other aspect of our financial system. It's going to cause inflation to go back up. It's going to cause the stock market to go down. If it happens the way I suspect it's going to happen sometime this year, it's going to be pretty disastrous. And I hate being one of these doom and gloom, predicting the zombie apocalypse. I don't think it has to happen. And I think it is avoidable. But the way to avoid it is to smash a fist into the face of Iran so hard and so direct and so brutal and so decisive. They are scared to do anything anywhere for a long time. Um, you know, Take out a couple of their highest level mullahs, the Ayatollah, if you have to. Um, Take out their capacity to ship oil anywhere. Well, those are within our ability to do. I'm telling you right now, if we hit them hard and we hit them decisively and we hit them where it will affect their pocketbook and their confidence, because they have all the confidence right now and we have none. But if you hit them where it hurts and you make them feel that pain, they are going to back off. Now, it's Iran. They'll regroup. Might take them a few years. It might take them a decade. It might take them a couple decades. They'll regroup. They'll wait for the next cowardice Democrat leader to be in the White House, and it'll happen again. History repeats itself. They'll wait for the next coward to be in the White House. They'll wait for the next majority, cowards in the Senate, majority cowards in the House. And when they think and probably have a good idea and know that we won't strike back, they'll try and hit again. Um, we could stop it forever if we started putting some strong people in the White House that have a backbone and have a spine. Wish that we could reincarnate or clone Ronald Reagan and get him back in there, and have some of those policies moving forward. But it's just a matter of time before it hits the market, and with that, in combination with interest rates staying higher, and combination with a much stronger economy than a lot of people expected. We missed the boat 100% last year, me included. We missed the boat on a recession starting last year, on a weak economy, on a weak consumer. None of those things panned out. None of those things came about. And I am suspicious of some of the job numbers. I'm suspicious of some of the economic data that we're getting. It oftentimes gets revised, and it almost always gets revised in the way that does not favor the current administration, which means that the numbers are always slanted wrongly towards favoring the current administration. But even with some of those revisions, things are still stronger than I predicted last year and stronger than I expected at this point in time this year. But I don't know how long that can last. It feels like a house of cards, and it feels like it could topple very, very easily. And I think today you saw these big companies. You saw Meta. You saw Microsoft. You saw AMD. You saw Nvidia. You saw them under pressure for a couple of reasons. A lot of people are starting to say they're overvalued. They're good companies. They're profitable companies. Still not a bad place to put your money for the long run. But in the short run, they're overvalued. The hype is a little bit too big. And with these interest rates that are now likely to stick around and persist for much longer than people expected, they're under pressure. Now, it's gonna sound for a minute like I'm contradicting the narrative that I just gave, but don't be surprised if after some of those stocks took a hit today, and maybe there's a little bit of carryover tomorrow. Maybe tomorrow on the 7th they take a little bit more of a hit, or just maybe a little bit of a hangover effect. That's absolutely a possibility. But there's also, in conjunction with everything I just laid out, you've also got this FOMO going on. And every time there is a little dip, you've got a lot of people who say, I missed the last run up. I don't want to miss the next one. I've got to get in on this. I'm telling you, the last number of runs that we've had, these upward trends, they've all been a little bit surprising to me. November was a big surprise to me. December, a little bit less so. You kind of expected a Christmas rally. January, I would have never seen this coming. I thought after this amazing move through November and December, we'd flatten out and then even start to tip a little bit by now. And so far, it's not happening. And it might not happen for another couple of weeks, but I think you've seen a few of these days recently. I think you saw a little chink in the armor right back here. I think you saw it a little bit yesterday. And today was up, but not much. You've got a little bit of flattening going on right now. And it's a time not that you ever shouldn't be cautious in the market, but it's definitely a time to be kind of cautious in what you're doing. I would stay very non-directional with trades. I would be very remiss to go into a trade with an expectation that I know what it's going to do more than anybody else. I'm going to go straight bullish on something versus straight bearish on something versus completely neutral. I place a lot of trades and I send a lot of trades out to the members of the Safe Option Strategies program that are very non-directional trades that allow you to profit with a move in either direction, and even more so with a big move in either direction. And that's the segue that I'm giving myself into Ford Motors. Ford came out with their earnings after the bell today, and Ford, um, right now, they're only up 76 cents after hours, but at one point in time, I think they were up $1.30 or somewhere thereabouts in after hours. And I think Ford is going to have a good few days coming up here. They beat on their top and bottom line, and more importantly than that, what I think is the far more important story is that Ford is being direct and bold in their commentary about the electric vehicle market. They are pulling back. I was looking at the number a minute ago. They're pulling back to the tune of I think $12 billion on their money that was slated for electric vehicles. There it is, $12 billion is what they're going to cut on their electric vehicle spending, and they're going to take a smarter approach going forward. They're going to look at it and say, we will be in a position to grow the electric vehicle production as the demand and the need for it grows, but it's simply not there right now. They also want to make sure that battery um, technology and battery production is on par with what consumers want. If you own an electric vehicle, you know this already. If you don't own one, you've heard it a lot probably, but I'll tell you, it's a different thing when you actually experience it. One of the biggest knocks on electric vehicles is the battery life. They just don't go very far, even on a full charge. And they don't go anywhere near what their batteries are rated at. If you bought a Tesla that's rated to go 240 miles on a charge, you better plan on getting about half of that, because the only way it goes 240 miles on that full charge is if you're on a perfectly flat road, you have zero wind, you have a perfect temperature outside so that you do not need to run the air conditioning or the heater. You have to decide in advance that you're not going to plug in a device. You're not going to let an iPhone charge. You're not going to run the radio. You're going to turn off every feature inside that car that makes it a nice car to drive. The autopilot stuff, the safety stuff. You got to shut it all down, and then and only then maybe you get close to that 240 miles. You do anything else that car is capable of doing, or you go uphill, or you run into a headwind, or you have to run the heater, or you have to run the electricity. That all runs off the battery, plain and simple. It all runs off the battery. So that battery life goes way, way down. They are the handful of electric cars that I've driven. I've driven a Mustang Mach-E. I've driven a couple different Teslas. I drove one of Volvo's small SUVs that is all electric. They are fun cars to drive. The technology in them is amazing. They have so many features that are so cool. They don't go anywhere long distance without it being a pain. And they're also a major pain to charge them. Some of you know this already. My wife and I did a trip to San Francisco over the Thanksgiving week to see my daughter and my son-in-law out there. We rented an electric vehicle. Great car to drive. San Francisco's a pretty compact place. The range wasn't a big issue for us simply because we weren't making any long distance trips away from my daughter's place, and we flew into San Francisco. But charging it was a major pain in the butt. You pull up an app to find charging stations, and it tells you that 3 miles away there's a charging station that has six chargers, and three of them are super fast chargers, and four out of the six are available. And you get over there, and of the four that are available, three of them are not working, and one of them got taken in the during the 3 mile ride you had over there. And so you got to start looking for the next place or wait for someone, and they take a long time to charge. We never the car that we rented, we never let the battery go down below 60%, but to charge it from 60 back up to 90 would take me a little over an hour. Okay, if I need to fill a gas tank in a car from 2/3 to full, it takes me about 5 minutes, and that's if I have to wait for a car or two in front of me at the pump before I can pull in and gas up. It's just a completely different experience. I've got a couple of friends that own Teslas, and they love them, but they're realistic about the use of them. They are to get around town, and they have chargers in their garage that they can charge them on. So they can get around town for a couple of days, use a little bit of battery, and then plug it in at night and have a full charge the next morning. Adds a little bit to their electric bill, but they don't make road trips in them. They've tried on a couple of occasions. They said it's a pain in the butt to make road trips. So I am glad. I really got off on a tangent there, but I am so glad that Ford is reassessing its EV plans, as this headline says. The vertical battery integration. I've got to read a little bit more about that to learn exactly what that means, but Ford was being treated very nicely in aftermarket trading. I hope they're showing that kind of a move when the market opens tomorrow morning, and we are going to be loving life on Ford. Any of the followers of Safe Option Strategy that are in Ford trades are going to be loving it. I'm going to let the people who are members of Safe Option Strategy, as well as those who are not, see this because it's late at night and I don't want to separate out these recordings. We are off to a great start. The trades that we've sent out to everybody, we're down a little bit on Amazon, but I'm not worried about that. They took a little bit of a hit today. They're gonna come back. I'm not worried about Amazon not getting above and staying above 170 during the time that we need it to get there. They flattened a couple of days after that great earnings report. I think it's good that they're coming down out of overbought territory. Not worried about Amazon at all. They're going to be back up to 170, 250 and above within a few days, and we're going to be in great shape on that. We're looking great on our Levi trade. The double diagonal that we did on Levi is up over 15% now. Our target is 20 as we edge continually closer to the expiration of these short options on the 16th. We're going to see that 20% hit, and we're going to be in really good shape on that. JP Morgan's still under a little bit of a pressure, but they improved today. We're down a little bit on the trade, not horribly, and they started to break out a little bit today toward, that you know, um, 175 mark and above. And that's what we need them to do is go to or above 175. And they started breaking back that direction a little bit. They're kind of flat for a few days, but I think we're going to see one of these next few days. I think that we're going to see them jump up towards 178 again and be profitable in that trade. And then the trade that we just opened literally this morning on Microsoft, I'm already up 3.5% in that trade. Remember, on Microsoft, all we need to do with Microsoft is see them stay at or above 385, which I think is a good, strong support level, even if they falter a little bit. They were down a little bit yesterday, down a little bit more today. Really flat today when push came to shove. But this is a great company. It's a strong company. They might have a little bit of a pullback, maybe to the 20-day moving average around 400, 397. But I'm not worried about Microsoft going in the red and dropping down below 385. So we're off to a great start. We're looking good. We're going to make some adjustments to collar trades tomorrow, specifically American and Delta. I would have done that tonight for tomorrow morning's open, but we're going to end up doing it tomorrow for Thursday morning's open. And that's just because I ran out of time today with some of the stuff that I had going on. Not a worry. It's not going to affect or change dramatically what we do or how we do it. We're going to be in great shape on that. So that is a wrap. I'm going to end everything right there. Again, I know most of you that listen to this are going to be listening tomorrow morning before the market opens. We'll get a much more timely podcast out tomorrow within maybe an hour to an hour and a half after the market closes. But thanks again for listening. Have a great Wednesday. Bye.